In this episode, we give you several random but important updates for your federal student loans. Let's get started. Are your student loan payments or loan balances a major obstacle in your financial life? Then tune in and let's escape student loan debt. Hello and welcome to today's episode. It's been a couple of weeks since we got together, and I have told you that there are periods in this federal student loan journey when it comes to developments in the news where they're not coming at as rapid a pace. And if there's not something to talk about, I'm not going to just get on here and give you an episode about a whole bunch of nothing. This week's episode is a little bit different because there have not been any major changes as it comes to federal student loans, but there have been several small updates that provide some additional context to some of the things we've been talking about in the past few months that I definitely think are important. So I'm going to just kind of go one by one through some things that I've been picking up either through my own observations with people that we've been doing consultations with. As a reminder, if you want to sign up for a consultation one-on-one, we're going to put a link to that in the show notes, but you can go to escapestudentloandebt.com/session to book your time. There are also things that I pick up from other people in the space. So again, a loose collection of facts that you need to know, starting with the dangers of consolidating your loans after July 1st, 2026, or for some people, consolidating your student loans at all. And if you're wondering why you would consolidate a student loan in the first place, a lot of it has to do with the fact that when you are taking out loans at different times in your education journey, you might be taking out a different type of loan at one point as compared to another. And that's really important because when you look at things like income-driven repayment plans, there are several payment plans that only allow you to participate in that plan in terms of just even signing up if you have direct loans only, and public service loan forgiveness, as a much bigger example, only forgives direct loans. Now, in times past, what people would do is they would take these loans that don't qualify and they would consolidate them in to a direct consolidation loan, either subsidized or unsubsidized. And prior to the Biden administration, what would happen when you consolidated those loans is any forgiveness credit you had on them before consolidation will be wiped away. So it didn't matter if you paid for 5 years, you'd be starting at year zero when that new consolidated loan was dispersed. Well, during the Biden administration, they changed the rules, and we're not going to get into those rules because they seem to not be in effect any longer. But the long and short of it is, instead of losing all your credit, there was some type of calculation to take in consideration what you had already had prior to consolidation. But with those rules currently being tied up in the court, the Department of Education has not given a clear answer as to whether they're still honoring the Biden administration rules or whether they're going back to the way things used to work. And if I were going to take a bet, I would bet on them going back to the way that things used to work, which means that you would lose all credit after consolidation. This means that the first date that we've been talking about that's really important for federal student loans is July 1st, 2026. That's the date by which you have to consolidate your loans if you're trying to become eligible for certain types of repayment plans. But you want to make sure that you don't do that willy-nilly, because if you're consolidating your student loans, especially ones that had previous forgiveness credits, and it turns out that you didn't have to consolidate them to be eligible for those programs, you're risking losing all of that credit if they use the rules that were in place before the Biden administration. Now, there are some people where it is necessary. If you do have Perkins loans or Stafford loans, then it's highly likely that you need to consolidate before July 1st, 2026. If you have Parent Plus loans and you're trying to position those loans so that you can be eligible for an income-driven repayment plan after July 1st, 2026, you also are going to need to consolidate. And that's actually the second update where we have more clarification from the Department of Education on how Parent Plus borrowers will be treated. So the way that this will work is we had the first date, the first line in the sand of July 1st, 2026. And when the One Big Beautiful Bill Act was released, the implication was, hey, all you have to do if you have a Parent Plus loan that you want to be on IDR is simply consolidate that loan. As odd as it sounds, even if you have one Parent Plus loan, you can technically consolidate that loan. And when you do so, you make yourself eligible for a type of income-driven repayment plan called the Income Contingent Repayment Plan. It's a terrible plan, and it's one that you wouldn't want to sign up for because it has the highest payment of all of the income-driven repayment plan options. So we were telling people for a time, hey, you don't even have to do anything. Just consolidate the loan and just wait. And at some point in time, they'll allow you to sign up for the old or new version of income-based repayment plan. However, the Department of Education has given further guidance, and they're saying not only do you have to consolidate your Parent Plus loans by July 1st, 2026 to maintain eligibility for income-driven repayment plans, you also have to have signed up for income contingent repayment and made 1 month's payment before they'll let you switch to a different option. And this makes that July 1st, 2026 date even more important because on average now it's taking 2 to 3 months, maybe more, to process these consolidated loans. And the way the guidance reads is you have to make sure that your newly consolidated loan is dispersed before July 1st, 2026. So, for example, if you wait to take care of this until April next year, you risk getting to July 1st and not having that loan actually completed and dispersed, and you would still lose eligibility. So, new guidance, have to sign up for the plan, have to make a payment before you switch, but it also has to be consolidated before that date, which means that if you do need to consolidate your Parent Plus loans, you likely need to act now. Next up, a hack that came from our good friends at Reddit. I don't know if you're like me, but I can fall down a Reddit wormhole for a very long period of time. And 90% of the stuff on there doesn't really feel that helpful or uplifting. But then there's that 10% of information that is so helpful and useful that it could only be found on Reddit. And this is an example of that. We've talked about the fact that there used to be a tracker. It was up there for like the blink of an eye that showed you how many forgiveness credits you had towards general income driven repayment plan forgiveness. There's still a tracker there that shows your credit towards public service loan forgiveness, but the tracker towards general income driven repayment plan forgiveness is gone. However, if you go on Reddit, they have a hack that they have been passing along through these different threads for the past several months, and it does appear to work where you can go onto your studentaid.gov platform and you can put a very specific link in your browser while you're logged in. And if you do that, it will show you kind of a back end count of the credit that the Department of Education currently has towards your forgiveness. And when I say specific, we'll put it in the show notes, but just in case for some reason you can't read them, that link is literally studentaid.gov/app/API/NSLDS/payment-counter/summary. You have to put that exact link, and that will show you your credit towards forgiveness based on the plan for which you're eligible. So for someone who took out their last loan in, say, 2003, really the only plan that they're eligible for is going to be the old version of IBR, which requires 300 payments before forgiveness. So you would see a credit that says you have 162 of your 300 payments, whereas someone who is eligible for pay as you earn, which requires 240 payments, they would see that same number out of 240. So a really unique hack. I'm sure at some point the Department of Education will close this loophole, but as long as it exists, we'll put this information in the show notes so you can use it to your benefit. Next thing we're going to talk about is still along those lines of income-driven repayment plan applications. There is unfortunately still a very large million-plus backlog in applications. We have people who have been waiting for months and months to have their application credited, still with no luck. Now, I will say, and this is something that's consistent across people in the space, it does seem that when we've told people to go directly to studentaid.gov to fill out that application as compared to doing it with their servicer, they have better luck. So technically you can apply for a new payment plan directly through Mohila or whoever your loan servicer may be, but we're having a lot more success in terms of the speed of the application being processed when you do it directly through studentaid.gov. Next up, I told you we're just going through these rapid fire because not all these will be relevant to you, but if it is, it will jump right out at you. We're going to talk about public service loan forgiveness. We've had a lot of listener feedback. We've had people who have reached out to me directly saying they're really concerned about what they're hearing about the public service loan forgiveness program and that it is currently under attack by the Trump administration. That is true, but I don't think it will be an effective attack. Essentially, what the Trump administration is trying to do is they're trying to say that there are nonprofits who are offering services that they consider illegal or services that are encouraging illegality, and that people who work for these nonprofits should not be eligible to get forgiveness under public service loan forgiveness. It doesn't take a genius to comb through what that means. They're basically saying for things like immigration crackdowns or for transgender support services that they don't want anybody who is going to have their loans forgiven because they work 10 years for a nonprofit that provides those types of services. The problem with this effort is, as we've talked about, the fact there are certain things that are created by the Department of Education, and there are certain things that are created by Congress. Public service loan forgiveness was created by Congress, and the rights that are offered to people who are pursuing it were baked into that statute by Congress. So they don't have the ability to unilaterally say that these nonprofits are ineligible, which is ironic because it's the very thing that they have criticized the Biden administration for doing when they did things like creating the SAVE plan or creating the new rules for deferment and forbearance. So nothing to worry about there, in my opinion. As a matter of fact, when it comes to public service loan forgiveness, just general public service loan forgiveness, not the buyback requests, I would say there's been more positive news than negative news because, again, if you follow student loan threads or Reddits, you will see that there's been an uptick in people who have been receiving their golden letter. We actually have an article up on screen from Forbes talking about that very phenomenon. So you get the letter from the Department of Education. Then you can log on and see that at some point in time, the bar of credit towards your 120 months has gone to green. And then typically after that, you would get either a letter from your student loan servicer, or you would just log on and see that your balance had been decreased to zero. And for some reason, maybe it's more people working in that department, but over the course of the past couple of months, there has been, at least in terms of what you see online, a huge increase in terms of the number of people who are getting that golden letter, which is good news if you've been waiting. We'll end this with one more negative update and then one more positive update. The negative update, when it comes to income-driven repayment plan forgiveness, it is still on pause. So we've talked about all of the things that are on pause through the courts. That kind of makes sense, right? Hey, they haven't given you a final ruling. So technically you can't sign up for this plan or you can't make payments under this plan. But this one makes no sense. This is literally just them being obstructive, in my opinion. The Department of Education has said that while this litigation is tied up in the courts, they cannot forgive student loans even if you've met the required payment amounts under plans like income-based repayment, pay-as-you-earn, and the like. Now, their rationale for not being able to do this is because they're saying, hey, during the Biden administration, they made changes to things like the credit towards consolidated loans. They made changes towards things like your ability to get credit for extensive periods of deferment and forbearance. And the new administration feels that some of those rules and allowances and changes were illegal, and that there are people in the system who have credits on their account that should not have been applied if those rules were never allowed to be implemented. And as a result, they're saying that it's taking them time to go through and correct the counts toward those people's totals. And as a result, they need to put a pause on forgiveness in general. Now, there is nothing that implies that this is something that has to be done, but it is what they are going with right now. So fortunately, if you meet your 240th payment or your 300th payment, depending on your plan under income-driven repayment, you can just put your loans in forbearance and just wait for this whole thing to hold over. But unfortunately, it may take a good while because as of right now, even if you've done what you needed to do, they are refusing to process that forgiveness. So that's the negative update we got out of the way. But the positive update is if you are the type of person who owes about or less than what you make in federal student loans. So a person who makes $75,000 and owes $75,000 or less, makes $100,000, oh, you get the point. If you're one of those people, then we've talked about the fact that you may be a candidate to have your student loans refinanced at a lower interest rate because it's highly likely that you're going to have to pay your loans off in full rather than having it forgiven. Well, the good news is it is highly likely that the Fed will drop interest rates, which will potentially lower interest rates all across the economy, but definitely lower interest rates for private student loans. So I would set an alert, set a Google alert, whatever you need to do, or keep your eye on the news to see if this does indeed occur. And if you're in that category, I would remind you that there are several ways to check the potential rate that you could get on a private student loan without having a negative impact on your credit. So if you do see that news story come to pass, I would go and start a regular cadence of checking and seeing what rates may be on your private refinance rates, because if you find an opportunity to significantly lower your rate and provide some budgetary relief, then you could be in a position over the next few months where it makes sense to act. So I know this was a very disconnected episode, but right now we don't have a consistent theme of updates that are occurring with federal or private student loans. If that does happen or change, then we'll have some more themed episodes. But until then, we'll give you as much disconnected information as we need to have your federal student loans forgiven, reduced, reorganized, or expedited. I'll see you soon. From Escape Student Loan Debt, this was the Escape Student Loan Debt Podcast, a show for established professionals whose student loan payments or loan balances are impacting their marriage, their business, their credit, or their dream of achieving homeownership.